Before the weekly analysis begins, I just want to let you know that I do have a Patreon page. We have two tiers available. The first tier is called Start Off for £15 a month, and what you will receive is access to a Discord server containing the beginners, intermediate, and advanced course, risk management course for Elliot Wave trading, as well as financial literacy content. This tier is also for those who want to learn at their own pace and generally just support what I do and just join a community of like-minded traders. The second tier that I have is called the Waveologist for £35 a month, and what you receive is everything that I mentioned above with the addition of specific chart requests for me to annotate on a daily and weekly time frame, and one-to-one support or group sessions depending on how many people have subscribed to this tier. The group or one-to-one sessions are for those people who want a little bit of extra help with their Elliot Wave education, and also give the opportunity to ask me as many questions. Please do keep in mind that these are going to be 1 hour sessions depending on how many people have subscribed, and also I would say please do consider joining. It is really good value for money, and without further ado, let's get into the analysis. Alright, so this is going to be my analysis for pound yen, pound dollar, and gold. I will only be looking at these three charts for my channel for the moment, as these are the only three charts that I tend to focus on with my training. But first of all, any opinions or views that are expressed in this video are simply my opinion. They do not constitute to financial or trading advice. With that being said, let's get straight into the count. This is on the weekly time frame, and obviously a higher count is extremely valuable. A top-down count is needed, especially in every form of trading. So we do have a wave 1 here, a wave 2, and then wave 3 subdivides into an extremely extended wave 3 in 5 waves. So we have a wave 1, a wave 2, and this is wave 3 of wave 3. So 1, 2, 3, 4, and a 5. That gives us our wave 3. Then we have a wave 4 that could be either interpreted as an expanded flat or a running flat, or a regular flat, sorry. And that gives us our wave 5 impulsive structure, ending us in a leading diagonal, which I'll show you. And that gives us our wave 3 in a higher degree. And then where we are currently right now is in a corrective structure to give us our fourth wave completion, which I believe it is completed, and we are expecting one more push up to give us our fifth wave completion. Let's get into the lower time frame, and let me just explain and show you guys it. So we do have a wave 5 here, which ended as a ending diagonal, and then we also have an A, B, and a C, which gives us our W, a wave X, and then we have 5 waves coming down as the impulse, 1, 2, 3, 4, 5. And where we are right now on the markets is we are getting an impulsive structure in 5 waves. We have a wave 1, a wave 2. This is a wave 3, which looks like it's going to be completed. We're expecting a wave 4 and then a wave 5 back up into this structure right here. Now, where do I see this market going in terms of what to do and how to enter and everything like that? First of all, I'm not sending you guys a signal, so don't consider this to be a signal. But how I would look to trade it is, I want to wait for this to sort of finish up to give us our first initial wave in the sort of a higher degree, or in the minor degree. And once this market structure has been broken and we've seen a closure above this level, then we want to see a sort of correction coming back in to give us our wave 2 in 3 waves. And then from there, once price action has given us a confirmation, we can then look to take it to the upside. Now obviously when it comes to Elliott wave theory, you want to have there's rules in place. So we usually place stops below here. Wave 2 can't surpass the start of wave 1, but however, that's quite of a that's a big stop loss. I don't want to be risking 300 pips when it hits around 50-60% retracement of this level. So I want to wait for a first impulsive move to start coming in, and then once it breaks the market structure of the corrective structure, so we have, if there is an A, B, and a C, or a WXY, once it breaks the B wave or the X wave, then it needs to form another smaller correction. We can then place our stops below here, and then look to take it in here, look to take it from there after price action confirmation has given us that entry. But with that being said, where am I expecting this market to go in terms of the long-term degree? I am expecting this is a bullish or impulsive move, so I am expecting the market to continue going up higher. There will be corrective waves obviously involved as the market does move in impulsive and corrective waves. But with that being said, we are going to be continuing higher for one last leg to give us our fifth wave completion before we start seeing some sort of bearish movements starting to come in this pair. So that's GJ. Let's go on to the next pair. So pound dollar. Pound dollar has been extremely bearish. We have, in my opinion, have completed the wave 4, and this moved up in as a zigzag. So it's a 5, 3, 5, and ending off as a ending diagonal for a fifth wave. And we have started to move down impulsively. Now, this count right here, it's not a really good count, but it's sort of what I can do, the best that I can do. I'm not saying that it's the right count or anything like that, but this could be a leading diagonal. Wave 3 is longer, or is the longest, and it's longer than wave 5 and wave 1, which is fine. And where I'm seeing this currently is giving us our fifth leg down. And it's going to be an impulsive move down, and the way this is going to happen is, well, we've currently hit the wave 1, or the wave 1 in the bigger degree, and this pushed us impulsively down. If you want to use trend lines, we can draw trend lines from those highs. So we have a break in the trend line, and where I see the market happening now is we're currently in that wave 2. We will see some sort of correction coming in, maybe to go up again one more time, and if price action confirmation gives us the confluence and the confirmation from 50-60% level, we can then put our stops above here and then look to take it, and ride the wave down, and hopefully that gives us our fifth wave completion. And then from there we can then start to see buying momentum sort of coming in. But at the same time, you just want to be a bit more careful with this, but it is extremely volatile. In terms of the bigger wave count, like I said, I still believe that we have just completed that fourth wave. We have a wave 1 here, a wave 2, a extended wave 3. This is the wave 4 that we've just completed, and we're now in the beginning stages of that wave 5 completion. So yeah, in terms of the bias, we are extremely bearish. Moving on to the next one, which is gold. Gold has been a bit tricky. It's been in a long correction for about 2 years. It's been moving sideways. In terms of the bigger picture, we do have a wave 1 here, a wave 2, then we have a wave 3, and then we have this long correction that has been going for 2 years, sideways correction, which basically has given us a regular flat correction. And we have finished that regular flat correction, and we have sort of pushed up broken market structures along the way impulsively, and we're starting to see a bullish momentum starting to come in. My wave count for this is simply a 1, 2, then we have to have 5 waves, so 1, 2, 3, and then I consider this to be a triangle, a wave 4, and then a wave 5. That gives us our third wave. And then we have a running flat pattern here as an A, B, and a C to give us our fourth wave. And then we have a 1, 2, 3, 4, 5, and expanding diagonal, and that will give us our wave 1 in the higher degree. So all of this constitutes to a wave 1, and we're expecting simply a correction to eventually come in to give us our wave 2. Now, I'm not suggesting you buy this, I'm not suggesting you sell this, I'm suggesting you just sit on your hands, because at the end of the day, we have been extremely impulsive, and we're going to start to see sells, I think, start coming in, and that will give us a corrective setup to then eventually take once that correction has finished. We are expecting a more bullishness to come in. However, I don't see that bullish momentum sort of kicking in anytime soon. I probably do see maybe for the first quarter of this year we might start seeing a bit of correction happening first, because of this huge impulsive breakout, and from there we can then look to see where the market goes. I hope you guys enjoyed my analysis. Please do like, comment, and subscribe, and thank you very much, and I'll see you guys next time.